Everybody, I'm Brian Shannon. Today is Friday, the 10th of May, 2024. Hope you had a good week in the markets. As you can see here on the S&P 500, it was a good week for that. Let's take a look at the closing numbers. And you can see across the board, we were higher, taking out, of course, the biotechs and crypto. So let's take a look at the equities, and then we'll take a look at crude oil, which was down also this, well, at least today. We'll look at crude oil. We'll look at Bitcoin and Ethereum at the end of the video. But as I am primarily an ETF and U.S. based ETF analysis in this, and I do U.S. stocks in my subscriber service, let's take a look at these indices. The S&P 500 is quickly closing in on a new all-time high. As you know, last week we bounced perfectly from the year-to-date anchored volume-weighted average price. That's why we keep an eye on that. It's often a level. So what we saw was the last two tests of the anchored volume-weighted average price year-to-date held. Oftentimes what we see with an important VWAP is, especially when we come down hard like that, we see a little bit of bouncing around in that area, and then the next couple times it establishes support. So we got that bounce from here. We had a rising 5-day moving average all week, and that's what kept me from thinking of any short sales. All week it was higher highs and higher lows above the rising 5-day moving average. We had a little bit of a scare on the open, I guess, Wednesday morning, but that quickly was bought up, and it was only down on the open. It was really basically the low of the day on the open. So unless you panicked in the first 5-10 minutes of the day, it was a bullish market this week. And next week, it doesn't seem like there's any reason to think it will slow down. We always want to be aware of where our stops will be in case it does. And that's, this is an important higher low this week. I think that's really kind of the key level is the open on Wednesday. And then it looks like we're probably most likely headed for a new all-time high. I don't see why it wouldn't happen. Now, does it mean it's going to just be able to run right through that level, or will it be sold into? You have to ask yourself, where has it come from? It just came from 500. Where does it have the potential to go? Well, 525 was our prior high. That's a 5% move. Is it going to be met with some profit taking? You have to be prepared for that. The Nasdaq was higher as well, of course, and we've got we leapt back above the 50-day moving average on Monday and stayed above it. We have been all week above the rising 5-day moving average as well, and that kept me from taking any bearish positions, and it will continue to. That is, as I mention all the time, that's the key for me as a swing trader. As an intermediate term time trend, the rising 5-day moving average tells me don't be an idiot and sell short. That's how I view it. And that's saved me more money than anything that I look at in the markets. The Russell 2000, we've had a nice recovery in here. We're back above the year-to-date anchor. We're back above the 50-day moving average, but it's just a mess. If you look at this, I mean, it's just all over the place. Good for you if you're long. I'm not. I don't have any interest in a choppy market like this. But if you're long, know where your stop is. That's all I'm going to say about the Russell 2000, because I think it's too erratic to really even trade. So why bother talking about it? The semiconductors, they were not quite as strong, but they held the rising 5-day moving average. And basically for the first 4 days of the week, we had that gap up and then a sideways correction through time, which was met with demand at the rising 5-day moving average. Today we gapped up. So this remains our important level. This was what we were looking at as far as prior support that acted as resistance, now back to support. So really 219, 220. Let's take a look at the anchor off that all-time high, and that's where we are as well. So that comes together not only as prior support and resistance, but that's where we have the rising 50-day moving average and this purple anchored volume-weighted average price off of the all-time highs. The trend is higher. Don't fight it. Biotech stocks, we got a nice bounce in here, and we encountered supply pretty much in the range where we were supposed to, and that is the year-to-date anchor. Let's just clean this up. And you can see here's the year-to-date anchored volume-weighted average price. We came right up to it a week ago today, and that was the high of this move so far. Now, what we might end up seeing for the biotechs, let's take a look at the anchor off of this all-time, not the high of the year. So we've got the declining 50-day moving average. We've got the declining anchor off of that high. We're seeing a pullback. We're below a declining 5-day moving average, so certainly don't want to buy the dip. Let other people do that dirty work of trying to get the best price. I would rather pay a higher price. I would rather buy it, not buy it here and let's see it do something like this, and then maybe it does this, and then buy above this level. That gives the opportunity for the 5-day moving average to flatten out. And then perhaps we see a couple days like this, we even come down and test that 20, or that 20 comes up to meet it. We'll be getting rid of this data on Monday in the 20-day moving average, meaning it's going to flatten out and start to rise here in the next week. So that 20-day moving average will start to come up, and maybe then we can get a higher low in here and then start to make another push for the year-to-date anchor. We're not there yet, but it's something to start considering. Financial stocks, they are doing, as I say to subscribers every day, what they're very good at, which is just to continue to grind higher here. And I don't trade financial stocks, and I've missed this rally, and it doesn't bother me at all because it's not it's not the market that speaks to me. So I don't trade it. Just like, we had a great week for gold as well, gold and silver. I was thinking maybe it would pull back, but gold and silver, both of these are back in business in terms of their uptrend. And a lot of the gold miners have a good look to them, but they just trade so erratically. What I was telling people is that the way that the gold miners actually trade is when the charts really look good, that's when you want to sell them. And when the charts break down, that's generally the time to buy them. That's not how I am comfortable trading in the market. I'm a trend trader. I want to buy the good-looking charts. So it frustrates me to trade the metals, so I don't trade them. Energy stocks, we saw, let's take a look actually. Let's look at crude oil first. Crude oil is still trying to find buyers in this general area. This is, just as a reminder, the anchored volume weighted average price from the December, is that December? December low. We've got the year-to-date anchor in here as well. That's the black line. The anchor off of this year's low is green. They're pretty much tied. So we're trying to find support in here, but we have a declining 20-day moving average. We have a declining 50-day moving average, and where it's kind of flat, I guess, but it's just kind of neutral in here. It came down and hit the measured move objective, and it's just, it's finding support where it's supposed to, but it's not quite a buy yet. And same is true for the energy stocks. So you could say that maybe they're a buy here. They pulled back and held up 5-day moving average. They're at the anchor from the year-to-date high. So the energy stocks are behaving better than oil itself. And if you're into these types of stocks, maybe they're a buy next week. Starting out, I would say your worst case stop goes under here. And ideally what would happen is the market would rally up and maybe make this a higher low. Your stop would go under there, and perhaps it does this, runs up, comes down, creates a inverted head and shoulders pattern right here, with this being the neckline, and then perhaps it's ready to go. And that might be a week or two away, and that would give oil time to recover as well. Let's take a look now at crypto, because I've been looking at this market as potentially being able to turn. We saw the test of the year-to-date anchored volume weighted average price, and that did hold. We had a nice bounce right up to the declining 50-day moving average and the red anchored volume weighted average price off of that all-time high. Now we're getting stuck with this declining 20-day moving average. That's the blue line in there. That's the anchor off of this little peak right here. And it just is, still kind of back and forth. Let's take a look at the 4-hour chart. You can see we came up a little bit yesterday. Now we're back below the month-to-date volume weighted average price. I just don't have a strong feeling for Bitcoin. I still have a very small piece. In Ethereum, I thought maybe Ethereum was going to recover this week, but it continues to get rejected. We're back down to the trend line, which we had drawn in previously from this low over here. And we did get a bounce last time, but that bounce occurred with a declining 20 and 50-day moving average. And here we are down to that trend line again. If this trend line doesn't hold, and I'm kind of suspecting it won't hold, I think what's most likely is that Ethereum continues to make this pattern that we had previously pointed out. And where's my drawing tool? I can never find it on this platform. And that is right here. We have this high, we have this low, we have a lower high, we have a lower low, we have a lower high, a lower low, a lower high, and I think you've got another lower low coming, probably into that anchor from this low right in here, and that's where that trend line is well. So it kind of looks like maybe 2,700 coming in Ethereum. I wish it weren't that way because I'd like to get long. I'd love to see it, turn around, but I think it's going to need to do something like this and then perhaps get going. So now's just not the time for that. Have a good weekend. Thanks for tuning in.